Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so let's make a full breakdown of the situation that we currently have on GBP AUD. Now, the reason for which I want to speak specifically about GBP AUD is because the pair is very near to providing to us a good trading opportunity. So obviously, I want to speak about it and share the full situation that we have on it. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about this pair from a technical perspective. I will then go and check what we have from an order flow perspective with the commitment of traders both on the pound and on the AUD. Because obviously, if we're able to read what the biggest speculators in the market are doing, so the hedge funds, the big banks and institutions, if we're able to track how they're moving their orders in time, we do have an advantage over our competition in the market. And by the end of the video, we will know what we can be looking for. So this video will be both educational and practical. So without further ado, let's get straight into the analysis. Now, starting here from the monthly time frame, what we can see is that the market is currently testing a quite strong area of demand. Now, why is this area a strong demand zone? Because exactly from here, the market started all this move to the upside, and currently we're testing exactly the same demand area from which the market has already created a rejection here. And now, as I have just said, we are exactly inside of the same demand zone. Now, you might be wondering, okay, but the market is currently trading below the area. Now, this doesn't mean that the zone is actually broken. In fact, what we can see here is that we still have 19 days and 8 hours to go before this monthly candle will actually close. And as you know, in the market, a level of structure is only broken if you have a close of the candle below it. So in this specific case, we are still inside of the demand because we still have 19 days and 8 hours to go before this monthly candle will actually close. So at the moment, we are testing strong demand from a monthly perspective. Let's keep it in mind and go down on the weekly time frame to see what kind of situation we have on the weekly time frame. Now, here on the weekly, what we can see is that we have a market which has created a nice impulse to the downside, followed by this correction. Now, after an impulse and a correction, what you expect is for the market to provide a continuation to the downside, possibly for the creation of a lower low. Now, generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we take our Fibonacci from the high to the low of this impulse, what we can see is that the market has retraced exactly inside of the zone, which is between the 50% and 0.618 of the Fibonacci taken on this weekly impulse. So after a nice retracement, the market has then started the continuation to the downside, rejecting the confluence of a resistance, in this case, given by the zone in between the 50% and 0.618, as we have just seen, and the previous structure. In fact, what we had here was an area of previous structure support, which was acting as support here and support here, which is now term resistance. So the market was testing previous support, term resistance in confluence with its zone in between the 50% and 0.618 of the Fibonacci taken on the weekly impulse. And that is exactly the reason for which the market was rejected from the zone, creating a continuation to the downside, which is anyway what you expect in these cases. Because as you know, in the market, after an impulse and correction, what you expect is for the market to provide the continuation to the downside, possibly for the creation of a lower low. So at the moment on the weekly, everything is bearish, but there is one quite important thing to notice. We still haven't broken below the previous low. This zone here, which was very strong support and demand here, is again strong support and demand here, and at the moment the market is still above the area. So we can expect the market to provide a rejection away from the zone. So also on the weekly, we are testing strong support. Let's go down on the daily time frame and see what we have. Now, from a daily perspective, first of all, we had spoken about GBP AUD quite a few times in the past. I spoke about GBP AUD after this W formation. I made a full breakdown when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the downside, and that is exactly what the market did. Then I made another breakdown of GBP AUD after this overextended W formation, explaining all the reasons for which from here we wanted to see the market create this move to the downside, and again, that is exactly what the market did. Then we had the creation of this overextended M formation, and I made another breakdown when this market was here, explaining all the reasons for which from here we wanted to see the market create this move to the upside, and again, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was here, I made another breakdown explaining all the reasons for which we wanted to see the market create this move to the upside, and again, that is exactly what the market did. And then we had the creation of this very strong impulse to the downside. And when the market was testing this zone here, I made another full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the upside. And again, that is exactly what the market did. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking for the next opportunity on GBP AUD? Now here on the daily time frame, what we have is a market which has just created this overextended M formation. Now, after an overextended M formation, generally speaking, you want to see the market create a move to the upside to go and test at least the 0.32 of the Fibonacci taken on the impulse leg. So from the high to the low of the candle that has created the last leg of the M formation in this specific case. And if we take our Fibonacci from the high to the low of this last leg of the actual M formation that we have here, we consider the market has actually already retraced to the 0.382. However, there is one quite important thing to notice. That is only the first upside target of an overextended M formation. After an overextended M formation, first you want to see a retracement to the 0.32 of the Fibonacci taken on this impulse, as I have just explained and as the market has already done. But as a second target, you want to see the market go and complete the pattern at the previous support, which is now turn resistance, which is the neckline of the M pattern. Now, in this specific case, the neckline of this M pattern is exactly here. So this previous support, now turn resistance. And as we have already seen on the monthly and weekly, we are at the moment inside of a very strong demand area on the monthly and weekly timeframes. So we have strong demand on the monthly. On the weekly, we have strong demand as well, and on the daily, we have a bullish pattern, which is this overextended M formation, which has an overall upside target at this previous support, which is now turned resistance. So there is definitely the possibility to see the market create this move to the upside and go and complete the pattern at this previous support, which is now turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that, first of all, on the pound, hedge funds have started adding quite a lot of shorts. In fact, we can see that we are currently having an added 958 short positions with the last report, closing another 200 longs, bringing the short positions at 31.8K and the long positions at 35.5K. So overall net positions are decreasing from the 6K that we had here all the way down to 3.6K. So the pound is definitely getting weaker. However, if we look at the long term, we can see that we went from having more shorts than longs with a negative net positioning of minus 19.7K with 47.2K shorts and 27.4K longs, all the way up to having a positive net positioning of 3.6K net positions with 35.5K longs and 31.8K shorts. So we have increased net positions quite a lot and in the long term, but as we have just seen, in the short term, net positions are decreasing. So we expected some short-term weakness of the pound, but overall we can still expect some strength since we still have more shorts than longs, which is a big change from here where we had more shorts than longs, so the completely opposite situation. If we go and see what we have from an AUD perspective, we can see that with the last reports, we went from having minus 10.8k net positions all the way up to having minus 3.9k net positions, with currently 63.6k shorts and 59.7k longs. So we have a quite high amount of shorts in comparisons with the longs on the AUD, meaning that the positioning is shifting to the positive side on the AUD, which means that AUD can get strong, but at the same time, all this position shifting to the positive side is not coming from the shorts getting closed. Actually, shorts are getting added. As you can see, we went all the way up to 63.6k shorts, which means that actually what we're having is an adding of shorts, but at the same time, longs are getting added more than shorts. I don't know if I make sense with this, but it's clearly the numbers that we see here. Net positions are increasing, but shorts are increasing as well. So the increase of the net positions is only coming from the fact that more longs than shorts are getting added. That is basically what we can take out of this data, which means that we can definitely see the market show some AUD weakness, which means that this overextended M formation can definitely complete. Now, how we will be approaching this kind of opportunity with students. Now, as usual, the monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. And at the moment, on the 4 hours, what we can see. Now, at the moment, from a 4-hour perspective, what we can see is that everything is still massively bearish. The market has still bearish price action, bearish structure, and we absolutely cannot be looking for any kind of longing opportunities yet because everything is absolutely still bearish. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. We will be monitoring price action from a 4-hour perspective during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. Now, if and only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point, we will be adding GBP AUD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to go and complete the pattern at the previous support, now turn resistance. On the other side, if everything will remain bearish as it is right now, the market will easily melt to the downside. So it's very important to wait on the 4-hour time frame for a proper shift to a bullish market. And in that case, we will definitely be ready with students to take a nice long trade for the market to complete this overextended M formation. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.